Hey everybody, Charles Toll here with Cross Country Mortgage, here for a weekly market update for August 13th. We had some good news and bad news this week. I'll start with the good news first, which is that the producer pricing index and the consumer pricing index, which measures the cost of goods to producers and to consumers like you and me, both came in either a little bit lower or as expected. So that kept rates pretty stable for right now. The bad news was that the 10-year Treasury auction was incredibly weak, which pushed the 10-year Treasury yield up to its highest point since October of 2023 when it hit 5.002. Now it's at about 4.668, which again is really the highest level since the 2007-2008 economic collapse. If we had these same terms a year ago, mortgage interest rates would probably be somewhere in the 8% range, a little bit lower. But over time, the spread between the Treasury bond and mortgage rates has decreased, so we're still looking at the high sixes for most mortgages as Freddie Mac average. But things are looking a little bit more stable. We're not seeing a huge fluctuation in oil prices. We know that there's uncertainty in Iran. There's a lot of geopolitical mess going on right now, which is going to keep rates high. They're not projecting rates or pricing a Fed rate cut into the market until sometime in 2027. If anything, it seems like there might be a raise in rates by the Fed. Right now, it's at a 40% chance of happening in the next meeting in September. A month ago, it was at 60% chance of happening in September, so those odds are declining a little bit, but 40% is a pretty big number, especially when we're not projecting an actual cut until sometime next year. So what does that mean? It means it's not time to start waiting around for the rates to get lower. We're probably in this market for the near term, 6-9 months. Honestly, we're probably going to be in this mortgage market for the next 2 to 3 years. So that's going to reflect in inventory, in homes, in buyers, in sellers. People are going to hold their homes a little bit longer if they have a lower interest rate. Buyers who want to buy, you can still get homes at a Groupon right now because rates are high, but there's going to be a little bit less inventory. You might not find the absolute perfect house that you dreamed of quite yet because not a lot of people will be putting their houses on the market. Right now, actively in San Diego, I think their numbers are up a little bit at about 8,000 active listings at any given point in time. But again, there's 300,000 people renting right now who can actually afford to buy a house. So if you're interested in being a homeowner, it's time to have a real financial plan behind this and not necessarily just shop for the lowest interest rate and find a bank who will provide you a letter. I think that there's a real two-step process here that has to be in place that starts with your first initial consultation and runs through continued service in your real estate portfolio for years after closing. If you're interested in that, give me a call.